chairman, Powell among them, saying the debt situation, the trajectory in the U.S. is unsustainable, but it's not a problem just yet. Well, gold is telling us that, yeah, it is unsustainable, and it's going to be a problem much sooner than most people are recognizing.
Welcome to the Alternative Edge Report. We go beyond to talk about, well, what's beyond just stocks. I'm your host, Olivia Voz, and I'm thrilled to be joined by Brien Lundin, host of New Orleans Conference and the editor of Gold Newsletter. Brien, welcome.
Thank you, Olivia. Great to be with you. And yes, we're talking about something that has been an alternative for a long time, but it's going more mainstream these days.
Finally, I mean, Brien, you and I, we know, and some of our viewers know, that gold and trading gold is timeless, but it is finally getting the recognition that it deserves. I'm just going to go out there because this is what everyone's thinking right now, especially those that maybe have FOMO or maybe those that got in early. Do we see more action in gold to the upside? Are you waiting for a pullback? What's on your docket?
Yeah, everyone who has been waiting for a pullback in this really still early gold bull market, still young gold bull market, about 18 months old, thereabouts. Everybody that's been waiting for a pullback has been bitterly disappointed. It just hasn't happened. And that goes to the reasons behind this market, what's driving this market, being central bank buying. So these central banks buy, I think, programmatically. They just buy a certain amount each month or each quarter. And so they're buying, their demand isn't being driven by the typical flow and ebb and flow of emotions like you would get from investors, but really just steady state purchasing of gold in the background and supporting the market. So we haven't had the kinds of pullbacks, the kinds of corrections that traditional technical analysis would have indicated. The corrections haven't been of the depth or duration that you would have expected, but only pauses in the uptrend so far. So, yeah, I would not wait for a pullback, but I would recognize that there are ways to get into this market that have lagged gold itself. And so there's still a whole lot of opportunity for people.
Are you discussing gold miners, individual stocks associated with gold that they can get involved in?
Yeah, exactly that. Plus silver. Typically gold has been leveraged. Mining stocks and silver are the natural levers to gold. They outperform gold in every long-term bull market, but they have not in this bull market until really recently, the last few months or so. So from a long-term view, mining equities in particular, although many of the big miners have doubled or even tripled, by a lot of traditional metrics, standard metrics like price to earnings, price to NAV, et cetera, they still remain at long-term lows because their earnings have increased much more quickly than their prices have. They still represent great long-term bargains and still, I believe, have a lot of running room ahead of them.
Brien, you mentioned that gold's run up has a lot to do with central bank buying, but we have other investors and worries that gold investing is actually a form of de-dollarization, the debasement trade, if you will. Now that we have some worries with the US government shutdown, and obviously there's geopolitical risk everywhere, do you agree with this logic?
Yeah, but I've agreed with that logic for decades now. So it's interesting that Wall Street is just starting to catch on. I saw on CNBC this morning actually somebody talking about gold and saying, well, isn't it strange how investors seem to be looking at gold as being more reliable than the dollar? And it really took me aback. And it's yeah, no kidding. And that has been the anti-dollar, the anti-fiat currency trade for decades, and if you look at it from a monetary standpoint, even thousands of years of human history. But it's become a new realization, I think, on Wall Street and in mainstream publications and analysts and the like, that gold is telling us something here, and it's telling us something that should have been evident for a long time, that the current trends are unsustainable. We've had Federal Reserve chairman Powell among them saying the debt situation, the trajectory in the U.S. is unsustainable, but it's not a problem just yet. Well, gold is telling us that, yeah, it is unsustainable, and it's going to be a problem much sooner than most people are recognizing. So I think that's a kind of slow motion realization that we're seeing happening, but it's being reflected in a kind of a fast motion reaction in the price for a number of reasons. And that's primarily the overwhelming demand by central banks has really been dwarfing anything else out there.
We were seeing the stock market, gold, and crypto. When I say crypto, I'm discussing Bitcoin, all move up together. And now it seems like there is a pause break. Gold continues to go higher. The market is as well. Bitcoin is rolling higher. Do you see all of these going together, or are we going to get a pullback in any of them at any given time?
Yeah, I think you can see a pullback in some of the more speculative markets, that being right now, I think Bitcoin and the stock market. But it's an it's a function of really the oceans of liquidity that are sloshing around the globe right now, looking for a home. There's just been so much money creation over the decades, and really since the great financial crisis of 2008, where central banks have tried to rescue the markets and keep them afloat over and over again, and that's through the creation of more and more currency. So it's not just a dollar situation, it's really a fiat currency situation, and so much liquidity around the globe. A number of my colleagues think that gold cannot really get into a really strong, powerful bull market without there being a coincident decline in the stock market. I have not held to that case for many years because of these oceans of liquidity that have been fueling every market, really again since 2008. However, if we do have declines in the stock market, in crypto, where a lot of these speculative funds have parked and will start to flow into gold, I think gold will be the ultimate beneficiary. In short, I think just about any economic scenario going forward at this point tends to favor gold, whether it's through the uncertainty of what lies ahead or the certainty of inflation and further dollar depreciation and depreciation of all fiat currencies. I think all of that kind of really does help gold going forward. So it's being regarded, I believe, lately as the investment for all seasons.
And like we started the show, she's timeless, gold. She is timeless, but finally getting the attention here. What would you say is the best way to play alternative investments right now? Would it be shorting the dollar, or would it be buying gold, looking at the miners, silver?
Yeah, I think if you're looking at it from a trade standpoint, I mean, if you're looking at insurance, insuring wealth, I think gold, that's another reason. One of the primary reasons to hold gold is to insure against the depreciation of your currency and protect whatever money, whatever cash you can put into the metals, gold and silver, you can protect that from further depreciation. So there is an insurance aspect. If you look at it from an investment standpoint or even a trading standpoint, again, silver and the mining stocks have lagged and have room to make up to get to fair value. Mining stocks in particular, I think, have a long way to run because their earnings at these levels are absolutely extraordinary. They are literally digging money out of the ground. Their margins are large and rising because energy costs are so large or so small relative to where they've been. Energy is perhaps the largest input into the cost basis for gold production. So it really is a perfect storm for gold miners right now, and their earnings just keep going on up and up. gold at $4,000 or thereabouts, just every mining project in the world is wildly economic, wildly profitable at these prices.
Speaking of prices, before we wrap it up, do you have any price targets for any of the metals that you mentioned today?
Price targets. Would you like a price target or a timeline? I'm too
Ooh,
much of an old hand in the business to give you a price and a time. But that said, I think silver obviously has a $50 target on it. Once it gets to $50, which is the old nominal price high that was hit twice in history, I think it has
hmm
this blue sky ahead of it. So yeah, I think silver is going up much more. At some point in this cycle, I think the gold price is headed to $6,000 or $8,000, somewhere in that range. And that's based on the three previous bull markets that we've had in gold, where the price has gone up anytime from 5.9 times to 8.2 times from trough to peak. I mark the trough for this cycle at about $1,050. So that means something like $6,000 to $8,000. Whenever we reach that, that could be in 2 years, 3 years, 5 years, 10 years. We really don't know. Personally, I hope it lasts an awful long time so we can really make some money off of this trend. But I do believe that's where we're headed.
Brian, real quick, just to play devil's advocate, or just to do some fun poking, is it possible gold could ever get into a bubble?
Yes, it could, it will. Every market, commodities in particular, go from scarcity to abundance. High prices are the cure for high prices. They bring production to market, which supply can eventually, swamp demand. So yes, they can get into a bubble, but you have to look at what gold is, and at bottom, it's money. It has been for thousands of years of human history. And the end game in this case, I believe, after 45 years of ever lower interest rates, ever easier money, ever greater debt accumulation, I think the end game at this point will be to restore credibility to currencies in some way by reattaching them to gold. So the end the end vector for this trend is going to be at some point gold returning to its role as money, and I think that's what the market is realizing right now in the background. I think that's why a lot of the big money, central banks in particular, are going to gold, because they realize that at some point these currencies will have to be reattached, and at that point it's not a bubble anymore, it's money.
I think that's one of the big worries from skeptics out there about gold. What is it going to buy? Well, Brian's saying it's going to go back to become a base and a form of currency.
Yeah, and I think it has to. If we look at what's happened over these past decades, is that whenever there was a recession or a slowdown in the economy, the central banks came in with liquidity or easier money. They lowered interest rates. Then, with the great financial crisis, they lowered interest rates to zero. They came out with quantitative easing, et cetera, and some really unprecedented programs to bring liquidity to the markets. After COVID, they did everything they did in 2008, but they did it at 4 to 5 times as much, and they did it instead of 4 to 5 years, they did it in 4 to 5 days. So, what happens with each crisis that these monetary policies create? Each time the bubble bursts, they have to do more to get the same effect from the markets. As these cycles persist, the currencies lose their credibility. And I think at some point they will lose enough credibility that the only way to restore that credibility will be some reattachment to gold. I think that's where the trend is going. I don't think anybody knows how long it will take, but we have to recognize the trend, and that's where we end up, I believe.
Well, first step first, you saw the trend in gold. we have reached that trend, or we're probably just getting started in the thick of it. So that trend will come when it does. Brien, you are a wonderful forecaster. It is great to have you on. Thank you for your insight today.
Thank you, Olivia. Really appreciate the opportunity.
Thank you so much. That is Brien Lundin. And again, I am Olivia Voz. Of course, I'm going to tell you to like and subscribe because you don't want to miss future interviews like Brien.